Hello, traders. I welcome you all to this episode, which I titled Strategy for Trading Bearish Market. All right. As a trader, we should always have strategy, a good one at that, that we can apply into trading uh, any type of market. All right. Because if it's a bearish market, we should know how to position and when to position. And we should always have a strategy that we use. If it's a bullish market, we should always know how to position, when to position, and the strategy also that we need to apply. All right, if it is a choppy market, we just need to go away. We'll just leave it. You understand? But if it is a, a market that is consolidating, you just allow it to break out first before you now apply a strategy to look for an opportunity to join the market. Well, like as I told us, when the market is trending up, bullish, all you should be looking at or looking out for is what? A buying opportunity. And when a market is bearish, what you should be looking out for is what? A selling opportunity. So today, I've already taught us how we can trade a bullish market. Now, a strategy on how we can trade a bearish market is what I want to talk about now. All right. So at this point, when we say a trend is bearish, we are simply saying that price action has been going up, breaking structure to the upside, but when it gets here, instead of it to break structure to the upside, it stopped and create a double tops, come down like this, breaks this place like this, then you will now start breaking structure to the downside. All right, you now see that it start breaking structure to the downside like this. All right. So when you see a a trend like this, after you see breaking structure to the upside, it now got to a level where there's a moment of relief. Instead of this support level to take out this resistance, it creates another resistance again, push down again, created a support. Instead of it to break the structure high, it created another resistance, which is triple top, or you can call it head and shoulder, as the case may be. Then the next move you see is for this price action to sweep this level and it started coming down. Change of character happens, then you now see price action breaking structure to the downside. So now the point now is that these are the sign you will see uh, for you to know that a bearish trend is now changing to become bearish. Now my point, how do you now get involved when you see that a trend is now bearish? Number one, you should be looking for what? A bullish, you should be looking for a selling opportunity. Once it happens like this, what you should be looking for is what? Selling opportunity. Looking for selling opportunity. When bearish trend, you look for selling opportunity. Be looking for selling opportunity. All right. Look for selling opportunity. Once you see something like this, once you see a trend turning to become a bearish trend, look for selling opportunity. So at this point, what happens? Once there's a change of character, a change of character happens here. All right. Why do we now say a change of character happened here? Because this was the last support level. Why is it a last support level? Because this support was the last break of structure that we now experience. These ones here, they are not break of structure. All right, it only created equal highs. All right, this is the only break of structure, the last break of structure that we experienced. All right, this was the last break of structure that we experienced. Now, the only time we will now say, okay, price action has resumed bearish trend. All right, it has changed from a bullish trend. It has changed from a bullish trend. All right, now bearish trend. All right, now we are simply saying that after change of character has happened, that is when you can now say that a trend has changed. All right, that is when you now say a trend has changed. And where does that happen? It happens after the last support level has been violated. All right. Now price came, it tested it and it made a pullback to gather momentum and it now broke structure to the downside. At this point, we'll now say break of structure. All right. We'll now say break of structure. All right. What now happen? Change of character followed by a break of structure. All right. After that, you see pullback, break structure, pullback, and break of structure. So, how do you now get involved in this trade? All right. How do you get involved in this trade? Now, what you need to do is maybe I need to take all these ones off so that you understand it very well. Now that the train has gotten to this place, push back, then broke structure to the downside. Now, what you need to do is you wait for price action here, all right? Because this is the origin that caused the break of structure. Wait for the price here, all right? You wait for the price here, all right? Because now the next thing you should see is for price to come, all right, come back, all right, then push to the downside again, all right. It's for price to come back, all right, then push to the downside. All you need to do is wait for price action to come to retrace back to the origin that caused the break of structure, all right, then let it pull back, all right, to come back to the place, then you join to push the price to the downside. And where should you be targeting? All right, you should be targeting this uh this high here, the weak high. You target the weak high. Target the weak high. It's very important. Target the weak high. Once you target the weak high, you just take your one moment. I don't know what's happening. You target the weak high. Oh, why is this still okay? Nah. You target the weak high and okay, okay. All right. You just place your sell tool here. You just your SL above structure, then target the weak high. You just target the weak high because this place here is a strong high. This is a strong high. All right. No matter what price does, it will not take out this high. Once it takes out this high, remember what I said? Once it takes out this high, that means the trend has changed. So now we are expecting price action to come like this and break and take out this low. Why? Because it's a weak low. It's a weak low. All right? It's a weak low. This very guy here, this level, it's a weak low. You understand? This is a strong high. This is a weak low. All right? It's a weak low. You now mark it as what? A weak low. This is a weak low. Now we are expecting price to now come and take out this weak low, then create another low. All right. Once price creates another low, then what we should be expecting again, it's a pullback. It's a pullback. After it has created a low, we should be expecting a pullback. Now that it has created a low, then we say here break of structure because price has already taken this high, this low. We say break of structure. It has already breaking structure to the downside. Now, what we should be expecting is that the price action should come again. All right, breaks should come and tap into this level again. All right, should come tap into this level. All right, should come tap into this level. All right, should come tap into this level. Then before coming down again. So all you need to do is for you to wait for price action to come again. All right, it's for you to wait for price action to come to this level. Price has broken down this low. Then the next movement is for price to come. All right, create a low, make a pullback like this, then push again and break structure to the downside. Now all you need to do is get involved from here again. All right, get involved from here and your target should be this low. Like I told us, your target should be this low. All right, this is the low that you should be targeting. This low. Your target should be this low. All right, your target now should be this low. All right, above structure, your target should be this low. All right, and once you enter from here, you wait for price to come and take out this low. Once price take out this low, you now say break of structure. So guys, this is how to trade uh, a bearish trend. All right. Once price push and take out this low, you wait again for price to retrace. All right. Once price push to the downside and create another low, Now that he has created another low, all right, this is a high, he has created another low, you wait for it to retrace again. Price needs to retrace again. Once he retrace, you enter. Once he retrace, you enter. He push to the downside again. So this is practically how to trade a bearish trend. All right. If you are now, maybe it's been a while that you've been trading, you are now a professional, you can even join the trade as it's making a pullback. But remember, pullback will not tell you where it's going to stop. All right. If it's a continuation trend, that is where my other strategy comes in, because we need to know where a pullback should stop. It can stop from 23%, 23%. It can stop at 38%. All these levels are continuation of trend. So what do we mean by continuation of trend? A continuation of trend simply means, okay, it will not do it, price action will not retrace, make a full retracement. All right, it will only retrace a little, then continue. That means the momentum is very, very strong. It can retrace, stop at just 23%, or it can retrace up to 38.20%. Then they resume the underlying trend again. All right, but a real pullback or retracement, or you call it moment of relief, what you will see is that price action will retrace, or a moment of relief or pull back to 50%, even above 50%, sometimes 61%, or even 79%. All right, 50% is a discount level. Then even 61%, 61.8 or 79%, which is the golden level. You see, price action can retrace up to that then before it resumes the underlying trend. So you have to be very careful when you are trading a retracement. I will make video once it get to that level. I'll still make video on that. So if you are not a professional trader, if you have not been trading for a very long time, you don't need to trade the retracement. So once you enter and it breaks structure, you hit your TP, then you just wait for price to pull back, all right, for price to make a retracement. By the time you now see the price is about to resume underlying trend, you join it. But another thing is, that is why I told you, you go to my site, register, then let me teach you the other strategy, because you need the other strategy for you to become more profitable. All you need to do, if for me to wait for a retracement, what I need to do is just to plot my fib through and weights. All right. I know anything above 50%, for example, you can now see anything above 50. Once price get to that level, all right, I'll just enter. All right. Once I'll allow price to start coming, push above 50%. Anything above 50%, once I see any hesitation, anything above 50% to 79%, once I see any hesitation and price start giving me a bearish candle, I'll allow the first bar to close. Once the second bar opens and it's also a bearish candle, I'll just short the market. So it's like that. You need to learn the other strategy for you to be more profitable. Thank you so much. I hope this is very, very clear. And thank you. God bless you guys. Enjoy your trading. Make trading to be very simple. Do your analysis, Once you have already mapped out the point where you should get in, once price get there, don't hesitate, take position. Thank you.